Fed keeps on printing money. That's what I'd like to talk about today. The decision yesterday to continue printing $85 billion a month out of pure thin air is a horrible decision, and it'll just dig a deeper hole for the country. What's emerging is that the Federal Reserve Board is kind of an enabling device for gambling on the stock market and gambling in derivatives. It prints $85 billion a month, and it says that that's to stimulate the economy. But it really has nothing to do with that, because when the Fed gives the banks the ability to lend $85 billion a month, which is how it creates the money, there are no borrowers. There are no businesses that want to borrow. And the banks don't mind lending, but there's nobody to lend to. Because the economy is so bad and people are so pessimistic about it, nobody's asking for loans, and consumers aren't asking to borrow to make purchases. So the cash sits there in the bank, and what the bankers do with it is invest it in the stock market, which drives up the market, which is why you see the rallies every time the Fed just prints more money, because much of that will be just flowing into speculation in the stock market. And that's the safe money. Other money is used to buy derivatives and other forms of corporate gambling, which really enrich the bankers and the heads of the brokerage houses if the bets work out. And if they don't work out and the brokerage houses or the banks fail, well, there's an implicit federal guarantee too big to fail. And as we discovered with TARP, the government will make good on it and pick up their losses. So by printing this volume of money, the Fed is essentially creating the preconditions for the next crash. It's giving the bankers money to play with, in the same sense that you can give matches to a child, or heroin to an addict, or a drink to an alcoholic. Pick your metaphor. But ultimately, they're engaging in self-destructive activity with that money. In the near term, it's undermining the United States' position of dollar hegemony, where the dollar is the international currency. So, for example, China just agreed to buy oil from Russia, and Russia accepting payments in yuan, the Chinese currency, rather than gold. Rather than the dollar. So we lose the commissions in changing yuan into dollars and then dollars into rubles. And already our economic growth is estimated to be about 1 or 1.5 points lower than it otherwise would be because of the lack of those commissions on the financial transactions. It also means that if the dollar is not the basis of the global currency, that our exporters are going to have to hedge for the risks of changes in the exchange rate, and that'll make it much more difficult to export and also cost us jobs. But above all, the risks of debasing the currency are that you ultimately trigger massive inflation. There's just too much money out there. And when the economy begins to pick up, it's going to fuel an unbelievable and outrageous inflation. Now, in making the assumption that they need to continue to print the money, the Fed is really making a judgment not about the economy, but about the stock market. And they're printing it because they don't want the market to crash or drop by 10 or 15 or 20%. But the stock market volume is dropping dramatically. In September 3rd, it was at a 5-year low of total volume. The average American is increasingly not playing the stock market. They're taking their money out of it. And what's left are institutional players and speculators and bankers. And this kind of crony capitalism between the Fed printing the money and the banks and the brokerage houses using it to run up stock prices and make a killing is really what's going on here in this decision to continue to print more money. The Fed is not acting as a responsible and impartial arbiter of the economy, but it's acting as a sort of private bank for the Wall Street speculators. And it's destroying our economy. Thanks a lot.